Hello traders, Gary Wagner here, just before 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, October the 11th, 2019, and this is the Daily Report for Gold and Silver, our weekend review, and this week ended with a historic agreement on a partial resolution to the trade dispute that has been ongoing for the last 15 months. Although not much has been revealed, they did cover a wide swath of topics, and to me, the devil is in the detail. According to President Trump, it will be put to paper over the next 3 weeks and possibly signed as early as in a month in Argentina when both presidents of China and the United States meet. It does say that it covers IP, intellectual property, and that is what I am most interested in. The fact that they did a partial agreement to me makes sense in that there are so many components to the dispute that we currently have. Nonetheless, it did take gold dramatically lower at a point before recovering and had U.S. equities close higher. And when we look at the price board, you'll see the net changes on the day. It did affect the trade. We were stopped out. We'll talk about that in detail when we pull up our technical studies. Yesterday, I spoke about the fact that it's really going to be the fundamentals that determines the action that we see today. The fact that there was an agreement reached, it has not been put to paper, but that is supposedly going to happen soon. That did take the precious metals lower across the board, also took the dollar lower across the board. Gold, basis December, $14.9350, down $7.40. Of key importance to us was the low, which was $14.78. We had a stop at $14.7813. Unfortunately, that stop was hit. We'll talk about where I believe gold is headed next week and the week after when we take a look at our technical studies. Silver also traded lower on the day, but nominally lower due to the fact of the industrial component behind silver, 1757. And as I said, the dollar was also weaker. That came down about 0.4% at 98.03. Let's take a look at our technical studies. Although the market did recover off of the lows achieved today, and I'm speaking specifically about gold, we did see a low come in, and that came in right where our stop was, which was 1478. Absolutely unfortunate, because long term, I am still bullish on gold. The question that we have to ask ourselves is, with this agreement, is that going to change the overall perspective of where gold heads, let's say, over the next couple of months? And that's going to really depend when we see the details of the agreement that was reached. Because from what I read, the understanding is that the Chinese were able to stop tariffs getting ratcheted up, and possibly even new tariffs not becoming implemented. We got the fact that they're going to buy a lot of our agricultural products, but they mentioned that they reached some sort of an accord on the financial services industry being able to move into China, but more importantly, something on IP, intellectual property, because the exchange of technology is such a critical component of what we're trying to change in terms of the overall timbre, in terms of the trade relationship between our two superpowers, that is where the devil is in the details. What is actually going to come out of this? There's no doubt the two superpowers need each other. We are collectively the ones that produce the most in the world, as well as consume the most in the world. So to come to some sort of an accord is a very good thing. My question is actually what was accomplished, and we really won't know until what was said today is put onto paper and then written and signed. The one side fact that kind of is alarming to me is signatures only need to be placed by the President of China and the President of the United States, with really no oversight whatsoever. Let's see what happens. We can go from there. In terms of what I'm looking at, where could this market go? Well, if we see a continuation of the selling pressure today, the real level that is critically important, we did break through, of course, the 50-day moving average, but it comes in at around 1450. We can see that on a Technical basis, we did have a series of tops right in here. That also represents a 1-to-1 extension between what we labeled as a wave 1 and a wave 3 is an important number. But before that, we have this particular set of lows at roughly 65. So if we do see continued selling pressure next week, the area we want to watch is first 1465 and then 1450. 1450 is also close to the 100-day moving average. This has been Gary Wagner, wishing you as always good trading. And although we were stopped out and took a loss for this trade, we are still profitable for the year. Have a great weekend. We'll talk to you on Monday. Bye-bye.